the president's budget went to the Senate and it lost 99-0. Even the doorman didn't vote for it. It's incredible.
Got a lot of friends up there on the Hill.
Well, it's all posturing. I mean, obviously Obama wants to come in and say that Congress is the problem, not the executive branch, and that's pretty much what's going on here. But things are going to get very interesting. I think we have three options as far as what's going to happen with the tax law. As you know, Jonathan, at this point in time, as of January 1st, 2013, we lose the Bush tax cuts. Okay. Now that may very well happen. If it does,
or may not lose the Bush tax cut.
We may lose the Bush tax cuts. If we do, CBO is saying that would put us back into a recession. Probably not a good idea. We have Plan B, which is now being floated by the executive branch, that maybe we will put in a 6-month interregnum period that will keep the Bush tax cuts until Congress, after the election, gets their act together.
So is that essentially just buy us time? Is that all it's doing?
It kicks the can forward, which is all Congress has been doing for the last 8 years.
Just a little bit of a rubber stamp.
Right. Then you get into substantive changes.
And those may be?
Well,
what are we hearing out there?
Well,
what's floating around?
This is what we're hearing, okay? We're hearing that even though all these Republican senators, for instance, have signed Norquist's pledge not to raise taxes, at some point there might be room for a compromise, some tax increases in exchange for Medicare changes.
Okay. Tax increases, as we all know, can come in many different forms.
Absolutely. Fees, what have you. As you remember, back when Mr. Romney was governor here, that's pretty much what he did. He just increased all the fees for everything in the state. He didn't raise taxes, he just increased the fees. Now, getting back to the third alternative, the question is when that is going to happen. I would think that the Republicans are not in a mood to make any compromises before the election unless they believe that Romney is really going to get trounced. If they do, they may think that now is the most opportune time for them to make a deal with the Democrats. Now, the polls, for whatever they're worth, are saying it's pretty close.
Pretty close. At this point. Still early in the race.
It's very early.
We've just determined who the president's runner, going to be up against.
Yeah, this is the first day we're out of spring training after Texas, or the second day. So I just don't see this happening. And the question is whether Congress can get their act together between the day after the presidential election and December 31st, when the sword of Damocles falls. And by the way, all of the spending cuts that Congress agreed to come into effect, and that's called the cliff, where you have the spending cuts coming in and the tax increase coming in. So the question then is really what's going to happen. What do you tell your clients? And it's really tough. You tell your clients this is what the law is today, and honestly it isn't going to get any better. A 15% cap gains rate is a great rate. It's the lowest cap gain rate you're going to see probably in your lifetime. If you're planning to sell something, your business or what have you, between now and December 31st, this is the time to do it. And also try to get a cash deal, because chances are next year, if you do an installment sale, any gain, any cash you receive next year will be taxed at next year's rates.
Whatever that may be.
Well,
so what are we talking about in terms of potential impact, or we don't know at this point what the potential rates may be?
We honestly don't know. What you see, I mean, you're starting to see, and I think this may become a little clearer when Romney and Obama begin their debates and their
and actually lay out some real concrete plans.
The political machine comes into fore to see what happens. Now, Romney's proposal at this point, such as it is to decrease everyone's effective tax rate by 25%.
And pay for it with?
How it's going to be paid for is that you're also going to lose a lot of your deductions.